Welcome to my weekly review. Thanks for watching. I've got a daily chart here of the Nasdaq, and I know it's a weekly review. We'll get to weekly charts in a minute. Just wanted to go through this routine once again. You can see this cup with handle pattern, then the breakout. We had a 18% move and a 9% pullback. And now since this July 19th date, after the pullback, we've just gone sideways without trend. It's a trendless market, and typically with a trendless market, there's a good story or a good narrative for the bulls, and there's a good narrative for the bears, and the bears are talking about this head and shoulders pattern here, which is appearing on the Nasdaq. Although I believe that with the head and shoulders, I believe the bears would like to see something more like a little Gumby shoulder here. This shoulder's been working out a little bit. But anyway, the bulls will point to this, distinct, cup with handle pattern here. So this is bullish for the bulls. So like I say, in a trendless market, there's something for the bulls and the bears. The weekly looks better for the bulls, and the daily looks better for the bears. So like I say, a trendless market, and you can create your own narrative either way. I just take it one day at a time. And last week we were having a pretty good week until Friday, which was the options expiration Friday. And the third Friday of every month has become quite volatile. I did a study back from the turn of the century, and there's been 150 down days and 132 up days. So the bears are definitely winning with 4 ties since then. So there's been 286 Fridays in this century, and it's decidedly for the bears. But the point that I wanted to make is that up until about 2018, a 1% move was pretty rare. You'd get it once or twice a year. And now we're getting them 4, 5, 6 times a year. And in 2022, we had moves of 3, 4, 5% to the upside and the downside on that third Friday. So this, the Nasdaq was up last week until Friday, which had a 1.56% loss. And anybody who had profits got them taken on Friday, as a lot of these stocks sold off. Anyway, enough of that. I'm not going to. I did a lot of research on that stuff, but I'm not going to talk about it right now. I'm going to get to stocks because I like to buy and sell stocks. And with the Great 8 or Magnificent 7 or wherever you want to call it, we have the good, the bad, and the ugly. I'm going to start with the ugly. And it's Apple. We got a rotten apple here below the 50. It just has no strength. Got a lot of sellers here. You can see on the daily chart, the sellers show up even on the way up. We were seeing selling in the last few weeks. Apple, of course, there's been some news associated with that, but this is the ugly stuff. I'm going to include Netflix in it. Another ugly chart here, slicing the 50. Big sellers coming in last week. And then you got the bad stocks, NVDA, trading below the 50 now, and more, bad news, and the CEO selling shares, which he totally has a right to. If you don't sell them on the way up, when are you going to sell them, right? And the other one was Microsoft, another bad stock below the 50. It is forming a base here, but just no strength, and there's still distribution in this stock as well. And the good stocks, I'm going to call Google, Amazon, and Tesla. This is the good part of the good, the bad, and the ugly. And this made new highs last week. Anytime these mega cap techs are making new highs, it can't be that bearish, right? New highs are good. This is Amazon, pulled back Thursday and Friday, but still looks pretty good. These bases here are just a little short. We've seen a lot of this real short bases. I went through that last week and all through the week, so I'm not going to do that today. And the other one is Tesla. I like Tesla. This one has a little, longer base here, and starting to flatten out. So I kind of like Tesla here. And it's got the blue dot RS line. So yeah, it's obviously with the auto worker strike and Tesla not being unionized, we're seeing some of the auto manufacturers performing well. I'm going to get to that in a little bit. Anyway, I'm going to start you down the negative road and bring you back on a positive path. And I've got to go to the retailers here because this is getting really ugly for a lot of retailers. Not just the shrinkage and the organized crime, it's just the consumers slowing down, not spending as much, and their money's not going as far. This is ELF, which has been a stalwart for a long time. And now it's finally, I think it's forming a base here, which it hasn't done since this base here back the summer of 2022. I want to say about July here is when it broke out. Yeah. So if it forms a base here and trades below the 50, that's not the end of the world. As long as they can deliver this type of growth here, the triple-digit earnings growth, I think it'll be fine. So and they just bought a company that's going to be accretive to earnings next quarter. So I'm still looking for big things from Alpha. I don't think this has been a climax top or anything, just a base along the way. Anyway, that's my story. I'm sticking to it. I want to take a look at some of these ugly retailers like Foot Locker. Folks are not going to the mall and buying their shoes anymore. Foot Locker, even though they have a dynamic CEO, she's got her work cut out for her. That one is just a train wreck. Dick's Sporting Goods, which had been strong, they blamed organized crime for their woes, and this thing is just falling off a cliff. 150 to 112. That's not a good trade. It's not a good look for that company. Deckers, this shoe company was holding up well, and now it's below its 50, forming a base. You see, it sliced its 50, then it took weeks, like 15 sessions to get back up there, and it just got pushed back down with volume here. So that looks like a weak stock. Of course, CROX, I got to cover CROX. This thing has no strength. Below the 50, now below the 200, and just down. You can see the short-term moving averages down, the 50s down, and now the 200, the longer-term moving averages curling down. So that stock looks sick. There's just a lot of weakness in the retail space. Target, which has been a stalwart, a dividend aristocrat for many years, and just falling on hard times. And it's just, what can you say? The chart tells the story, right? All these moving averages are trending lower. So just tough times. I believe they'll probably pull out of it at some point, but it's going to take a long time to repair all that damage. Now, to be fair, I've got to point out a couple of retail stocks that are doing well. This is CASY. Last week I talked about the 3-day rule. Usually on a gap up like that, if 3 days, there's profit taking, and the buyers get exhausted, and so it only pulled back though, like a 0.5% yesterday, so not bad. And Murphy USA is another one, is trading in concert with CASY, and once again the 3-day rule. It had 3 days up and then pulled back yesterday about 1%. And the other one is Walmart, made a new high. It's a Dow Jones member, and it made a new high last week. So you got Google and Amazon and Walmart making new highs, and I'm going to mention a couple other stocks along the way. So it's not that bearish. It's just some of these growth stocks have been getting hammered, and there's a lot of pain. So it's treacherous trading out there. You got to be careful. And I'm going to go to more pain when the airline stocks. I'm not going to comment on these. I mean, these things speak for themselves. Alaska Airline, that was Southwest Alaska. So this trade is over. Delta, yeah. UAL, yeah. This is just that trade's done. And you can go to the cruise lines as well. Norwegian, oh man, this thing just sliced. It's 50. It did find support there at the 200, but these stocks are just looking hideous. It is a weekly review, so I'm going to show the weekly charts here, but not looking too good for these cruise liners. That's actually not too bad, even though on the daily it sliced its 50. Yeah, it might just be basing here, but I believe that trade's about over. Anyway, that's the negative stuff. I'm going to bring you back on the positive path now, and I've got to go to the coal. The coal stocks to do it. You get a lump of coal in your stocking, that's a good thing. This is AMR. We're going to switch the chart to green because this is green money all the way. 246 made a new high on Friday. I pointed this thing out about 190 here before the breakout, and people were telling me they're going to short it. I said, go ahead. I don't want to be a hero. The thing that draws me to this chart, though, is this long consolidation period. The longer the base, the higher in space. So this thing could just be getting started. We've been monitoring the coal prices in the morning, and they've been going up rapidly. CEIX is another one. I'm going to change this. Making new highs. You can see this long base here from 78.50. Cup with handle and the breakout and the move higher. And you can see the group here is one of the top groups as well. There's your consolidation and the breakout on the weekly chart. So yeah, I mean, just calling them like I see them here, trying not to be biased here. If Cole's working, Cole's working. Another long consolidation in the breakout. I would say this is just last week this thing broke out here. It's got this little base here of 6 weeks, but if you go back to March of 2022 at $42, and you got that breakout last week. This is HCC, Warrior Met Coal, for all you Warrior fans. And there's your short little base here. Now, we've been talking about these short bases, and most of them have not been working. They need more time. And I talked about Amazon and Uber. There's just a lot of them out there that look like that. This one is working, and you can see the big volume coming in on HCC. So congrats to the long there. That might have a longer runway too. Another one is the steel. There's only a few stocks in this group. This is Carpenter Technology. Pulled back on Friday 3%, but had a good week last week and has been making new highs. There you can see the consolidation, the breakout, and a big move last week, 7.6%. So, and that group is one of the top groups as well. So that they're doing well. And also the oil and gas stocks, XPRO, which was on our watch list and made a new high, I believe, on Friday. Yeah, still, it's got that cup with handle in the 23.72, 24, 24.50 buy area. But you can see it went up, exploded higher, 6.3% on Friday. So the options expiration was good for XPRO. There you can see the consolidation. You got the 3 weeks tight, the pullback to the moving average. So this thing just got started last week and mainly on Friday. So XPRO to me looks good and could still appear on a watch list. California Resources. It's another one that I like in the oil and gas space because of the long consolidation. You can see how long this has been since March of 2022. At $49.99, $50 here, and it just broke out, and now it's moved up, a little more than 5% higher here. So there it is, the pullback and the move higher. So CRC looks good to me. Weatherford, this one's going into the S&P Mid Cap 400 on Monday. It just keeps making new highs. It's just, if you look at the weekly, you can see what a big move this has had. Had one little base here, and it's just charging higher. Tidewater, same thing, just new highs. This one has had more of a consolidation along the way, but still showing strength. And another one is OII, Oceaneering. Another one made new high last week, then pulled back to the 10, but still showing strength. In the insurance group, I got to go to the insurers. The Doc. Thank you, Doc. Doc pointed this one out to me, back, I don't know, a few months ago. It had this symmetrical cup shape, consolidation, and then moved higher. It's got this 3 weeks tight pattern here now at that 230 level. There you can see the 3 weeks of tightness, tight trading. For Gallagher, the other one is Ryan Insurance. Insurance is doing well. If you have looked at your premiums lately, you know how much your insurance has gone up. This is Ryan, kind of a recent IPO. Been consolidating for a long time, but just broke out like 2 weeks ago here and making higher prices. So like I said, we like new highs. Stocks making new highs, can't be bearish. And my favorite ticker symbol, Brown and Brown, once again making new highs and just pulling back to the 21 here. There you can see the consolidation pattern. So consolidation is good. And we're getting that in the indexes now. I think the Nasdaq's consolidated about 2 months since that July 19th date. So better times are coming. It's been tough, I'm not going to lie, but I'm going to continue on the positive path. I showed Tesla earlier. The automakers are doing well. The ones that aren't on strike. Toyota Motors, another one just making new high. This one's going parabolic. And Honda Motors as well, making new highs here last week. You can see breaking out of this base. So some of the automakers are doing well. I'm just going to take a random walk and show you some stocks that are performing well. This is AAPL. You can see, it's a software stock, so it had to have that ski slope sell off. And now it's making new 52-week highs. This is GE. You can see from the weekly chart the big move, and now the consolidation, which I like. I like consolidation. I don't like chasing stocks. So yeah, that looks good to me. Like I say, these bases are really short. 37 days. This shows up here on the weekly of 7 weeks. And to me, I just think it needs more time. I think the indexes need more time. So that's going to test your discipline. It's going to test your patience. But like I say, we cannot control the markets, but we can control how much exposure we have to the markets and how we manage that exposure day to day, week to week. Because, I'm not going to lie, September has been tough for a lot of folks. Apollo, that's finance. I had to throw finance in there. Some of the financial stocks are doing well. And Uncle Warren at BRKB making new highs. Congrats to Warren Buffett. He needs it, right? Got to put gas in the yacht. KKR, which is another financial stock making new highs. And I'm just going through some stocks that are, showing strength. Celsius is one of our leading stocks here, having trouble with that 200 number. It's got a couple upgrades last week and didn't move, which is a little cautionary tale. Big red bar on Friday, but I have a belief that maybe some of those stocks that sold off hard on Friday might be bought next week. We'll see. I don't want to interject too much of opinion or bias here, as it's just a weekly review, and we're just going through the facts here, just the facts, ma'am. And this is Novo Nordisk, made a new high, then pulled back. They're splitting their stock 2-for-1 on the September 20th, which I believe is Wednesday. You can see this consolidation, this flat base, 15 weeks. Now that's more like it, 15-week base, and we're seeing a lot of 6, 7, 8-week bases now. So I still think we have a couple more weeks to go. Novo looks good, and so does Eli Lilly. I mean, Lilly, if I just go to the weekly or the monthly, this thing's just a monster. It did base here, though, 18 weeks back in springtime. So it had a nice summer, and now we hit the fall, and we'll see what happens to Lilly. Maybe to decide to make another base. We'll see. And I got to go to FIX because it's one of my leading stocks. And this one's just been ripping higher. This one surprised me. I thought it would just be this a trade from 150 to like 165, a 10% move, but it's decided to go higher. And if you're a trend trader, that's an easy trend to ride there. And the last one is Seadrill. Okay, that's it for today. Thank you for watching. Except for I lied. I'm going to go to this. I believe in seasonality. And we can see here, last year, 2022, you had these massive sell-offs. Some months, 13%, 10% in last September, and it was down 33% for the year. We know it was 37% peak to trough. This September, it's down 2.3%. I took this on Thursday after the close, and it had a bad day on Friday. But the average for the past 5 years is a negative 4.26%. You might think, this is just random, but these are facts. All right, this is what it's done. I'm not making this up. So I believe in seasonality, and there's a reason for selling in September. I'm not going to get into it, but I do believe that October and November we're going to get a recovery. We're going to get a rally. So the next couple of weeks we're probably going to see more weakness, and it's going to test your patience. It's going to test your discipline. And sometimes you just got to go hunting, fishing, hiking, swimming, golfing, whatever you do, and just kind of stay away from the trades, because if you're trading large in this market and you're not trading quickly, you're probably losing money, because the headwinds from the market, that's going against you, and your odds are not in your favor. But I believe going forward here, October, November, we're going to get the earnings reports, and I'm kind of a perma bull. I always think of the positive, so I always think things are going to be better. So just hang in there. I believe things will get better. The next couple of weeks could be treacherous, but one thing we're not going to ever do is we're never going to give up. So thank you for watching.